Did you know that Ichimoku Cloud is a very powerful tool with which you can identify market trends and it will help you make much better trading decisions? And you are, most likely, using it completely wrong. I'll explain to you why and show you what to do instead. You need to go from this to this. Notice the difference? Much simpler chart. Simple is better. Also, the key are those yellow boxes, and I will tell you all about them. But before we look any closer at the charts, you need to understand how the cloud works. Here's a quick and dirty run through. The Ichimoku Cloud is made up of two lines, the conversion line, or in Japanese, and please excuse my pronunciation, the Tenkan-sen, and then we have the baseline, or in Japanese, the Kijun-sen. The Tenkan, or the conversion line, is a short-term moving average, while the Kijun, the baseline, is a long-term moving average. The cloud itself is formed by plotting these two lines 26 periods into the future. This forms a shaded cloud-like area, as you can see here, which means that the cloud is always ahead of price. In a way, you can say that it's a possibility to look into the future. The Ichimoku Cloud can help you identify market trends and make better decisions for two reasons. The cloud acts as a support or resistance level, and of course vice versa. If the price is below the cloud, it is generally considered to be in the downtrend. Here is where it starts to get a bit tricky. Remember when I told you that the cloud itself is formed by plotting conversion line and baseline 26 periods into the future? Well, for this you need three more values. Leading span A, the Senkau span, and the leading span B, Senkau span B, and of course the lagging span, the Chikou span. And again, I sincerely apologize for probably butchering these Japanese words, so I am sorry. Please bear with me. Well, how do you get these three? By doing magic math stuff, obviously. I mean, just have a look at these wonderful, wonderful charts. You have the leading span A, which is basically a conversion line plus the baseline divided by 2. And you have the rest of the formulas here in front of you. Now, I know, this is where you probably start to panic. Do you need to remember all of this? Well, relax. No, you don't. You really don't. Because, well, all of this is done for you automatically by the most charting software out there. I use TradingView, and it's free for basic use. And no, I am not sponsored by them. I just really enjoy this software. It's you can have your own indicators, and it's just a delight to work with. All these values are usually preset in your software, so the lines that include a 9 period average, a 26 period average, an average of those two averages, the 52 period average and the lagging closing price line are normally usually preset in your software. So all you have to do, depending on which software you use, of course, is just to import the indicator. And you will have standard values preset. Now, what do we do now? If you search around the internet for Ichimoku Cloud systems, trading systems, you get something like this. And you have a buy signal if the price rises above the Kumo or the cloud. And again, sorry for the pronunciation. When the cloud turns from red to green, and when the price moves above the baseline and the conversion line rises above the baseline. And you have a sell signal when the prices falls below the cloud turns from red to green, and the price moves below the baseline and the conversion line falls below the baseline. And this basically is where we come to a screeching halt, because no, this is not how we're going to use it. Let's look at a different way to use it. Much easier, much better. All right, let's pretend that you're going to work with the S&P 500, and this is the daily chart, and you open up this chart. Um, Now we went back in time simply because I want to use this function of replaying in order to show you what is happening step by step. And obviously, by going back in time, I do know that's what is going to happen in the future. That's not the point. I just for fun, I will at the end of this video also look at the same S&P 500 daily as of today. So we are going to look in the future as well, but just in order for me to show you how this method works, so please bear with me that we are going back in time for me to show you this. Anyway, let's pretend that you're going to test this method and you open up this chart for the first time. You have no idea what is happening, and this is what you're seeing. You have the Ichimoku Cloud that went from support to resistance, and you have this very sharp move down. And now you're sitting there scratching your head thinking, what am I going to do with this? Should I go long? Should I go short? Um, well, it depends on your time frame, obviously. This move, this very sharp move, depending on if you're just gonna work with like a week or maybe 2 weeks, then yes, perhaps you can follow this sharp move, and be certain that you will have some perhaps drawback even more that you can profit from. But before we can I suggest that before we do anything, we need a bigger picture, because this doesn't tell us much. And how do we do that? Well, we zoom out basically. Um, and we zoom out and we see, okay, fine. So we had this very slow uptrend, and all of a sudden this happened. Something happened. So what are we doing? Well, let's zoom out even more. And now we're starting to get a better picture. There we go. What is this? What is happening here? This is the weekly chart, and for the past 10 years, yes, I am actually looking that far back, because it will help me to determine what is happening. And for the past 10 years, 12 years, we had this very slow, very nice uptrend. Everyone is getting rich, fat, and happy. We had this move, but then it's promptly corrected itself and it continued. And now, all of a sudden, you have this massive fall. What do you see? Well, for me, I believe that this is an Elliott wave, and I also believe that this is perhaps the third wave, which is the biggest one. Now, I don't follow the Elliott wave rules to the letter. I actually just look for the impulsive move and then a corrected move. So let's see. Let's let's build us a picture that this is an impulsive move. For the last 10 years, we had an impulsive move, and now all of a sudden we have this corrective move. How far do we expect this corrective move to go down before we get a reversal and a continuation of an uptrend? Well, we can measure it. Here in TradingView, you have these two. You have the retracement and the extension. And let me just show you the retracement so you know how it works. These are the values that I work with. Obviously, you can set your own if you want to. You can do it here, or if you're using a different program software, then obviously it's going to be different. But in TradingView, this is how you do it. So when I'm measuring an impulsive move for a retracement, I am looking for this retracement move to land somewhere between these three lines. So what are we going to do? Well, we're going to measure this impulsive move. started there, and then it went all the way back. I'm sorry, for here, for 10 years. And what do we see? We are seeing that we actually fell. We tried here, but didn't manage to go all the way down. But now, all of a sudden, we are down here. So we have two scenarios that this could continue down all the way down here before a reversal, or it could be already done by this point. So what are we gonna do? Well, we have a bigger picture now. We know that we had a major impulsive move for the last 10 years. Now we are in a retracement move. However, we did push the first step of it, which means that yes, this could actually be done. This could continue upwards, or it could continue a little bit more downwards. This tells us that we don't have, as of now, we don't have enough info to actually make a decision. So what we need to do, if we assume that this will continue down, we have to measure it. And we do the same, but in reversal. So if we assume that this trend will continue down, then we expect the price to reverse somewhere around here and for this cloud to push it down. So this is what we're going to look for. So we're not going to do anything. It's too early. It's just uncertain to do anything. So let's just see what happens. Now we're measuring the retracement. We're testing our system. We didn't get all the way, so let's see. Oh, there we go. There we go. Now, at this point, yes, we hit the target for the retracement. The cloud is getting bigger. What we want to see in order for us to assume that this is a continuation of the downtrend is a reversal here, because now we checked the box of the retracement levels. We're checking the box of this acting as a resistance, and let's see what happens. Still, it's way too early to do anything. Now we're going sideways. Oh, now something is happening. First indication of it, maybe we are not going all the way down, because remember, let's just go. I should not have removed that measurement. Let's zoom out again and add the measurement so we can work with it on the daily chart. There we go. And just let me lock it so I don't poke around. As you can see, again, it could go all the way down here, but since we hit the first line, the retracement is done. It could be done. It doesn't have to go all the way down there. So we are moving back to the daily and we're zooming in. And now you have these three lines to help us. Which means that if we get a reversal here, well, the next target for us is down here or down here. But it doesn't look like that. It's just going sideways. Now it's again broken through the cloud. Also, notice how the cloud is getting thinner and thinner, which means that the resistance is actually getting weaker and weaker. And we broke through and we continue. And now we are all the way up here, which is telling us that perhaps this is not a retracement. Let's see what happens. And boom. The cloud is starting to reverse to green again. So at this point, we're going to abandon the hopes and dreams of a continued short. Still a little bit too early, because we want to break this higher level, just to be sure. And also we want we want to see a higher low. You have a low here, and we want the price to fall a bit and then continue before we can say that no, the short is invalid here. So let's see what happens. Notice how this is holding. It is actually holding pretty good. Probably because there is a lot of a lot of shorts out there at this point. And the cloud is now switching more and more to support, which tells us even more that no, this is not going to go down. I mean, this is uncanny how it's just holding there. It's trying to push itself up, and we are starting to break. Let's see, that's the one I'm gonna, as you can see here. Yep, we're breaking it. So as of this point, we are abandoning the thought of that this will continue down, which means we can remove this, and we can also remove this. So what are we doing? Well, we are abandoning the short, and we are starting to think long. Perhaps this massive move is done, and this uptrend will continue. So we want to be a part of this, and we want to get in on the action. But can you just go long here? No, of course not. We want to find a better trade, and in order for us to do so, we need to find a good wave. As you can see here, we have a lower low, and then I'm sorry, we have a low, and then we have a higher low, and then we have a higher low again, and then we have a higher low that is broken. So we have a higher low high here. If we measure them, let's just see, retracements, and you can see, yep, it retraces back. Let's try this one. Yep, almost. Not quite, but almost. For me, these moves are way too small to gamble on them. So I'm just, at this point, me personally, I would still sit this one out, because it's weird. It's like very choppy and small waves. So I'm just not gonna do anything, actually. I want a bigger move. I want not the subtle little moves. I want a solid move so I can act on it. And there it's just continuing up. Here we had a low, and this looks to be a new higher high. So at this point, let's prepare ourselves. Perhaps we want to enter somewhere around here. And why? Because, well, for this move, you have a retracement at this area, and also you have the support of the cloud. Oh, let's see what happens. Boom. Goes all the way down. And still sticking there. Now we're getting closer and closer to the cloud. And we expect it, obviously, to work as a support for us. And also please observe this area, how it's just holding. I mean, it's uncanny. The cloud is getting thinner, so that is a caution for us, and we are not breaking this higher high. However, we are not breaking this lower low either, so we're getting in some sort of consolidation and a sideways move. So this is a bit of a caution. All right, and we're slowly creeping up, so we can just relax a little bit more. Probably this will continue up. Let's see what happens. Now let me just do this. Zoom in a little bit more. There we go. we are getting again a higher high. We have this low to work with, so we can measure this movement. If we go down from here, we expect that not to go below this point because that is the Fibonacci retracement last level for us, and also you have the cloud. No, it just continued. It just continues. And there you go. This is just an example of how the cloud acts as a support and resistance, and how you can use the Fibonacci retracement to catch this corrective move for an entry. What I didn't show you, I forgot to show you, is the extension, and the extension measures the next impulsive move. So let's say that you believe that this is an impulsive move, then you have the corrective move, and somewhere around here you want to know, okay, but how far will the next impulsive move go? And that is how you measure it. You just pick a low, a high, and a low. And that green area, this green area, is the target for this impulsive move. Again, the values, that's up to you to decide what values to work with, but myself, I use these levels for this indicator. All right, guys. Also, yes, I promised to look into the future, so let me just do this. Whoops. And this is how it looks as of today. Again, this doesn't tell me much, so I have to zoom out. I have to zoom out and just see what is happening. Well, still this impulsive move in the S&P 500, and now we are creeping down, and that is the place where we worked. So let me just remove that and zoom out a little bit, and instantly we can see that, okay, impulsive move, which means that we can measure it. Let's do retracements. Impulsive move, corrective move, and we hit the target there, and we're continuing to hit the target. We are smack in the middle. Let's zoom out to see what is happening. There we go. There we go. Let's also just have a look at the monthly. See, on the monthly chart, this tells me that I'm not supposed to measure this. Actually, I'm supposed to measure this one. There we go. There we go. These are the new levels. For this impulsive move, if we're going to look into the future, that means that we should go down even further, somewhere around here. Obviously, this is something that we have to follow day by day and week by week and month by month. But on the bigger picture, on the monthly picture, we see that there is still room for some downside. The cloud is getting bigger, which means that we should see a slowdown on the free fall of the S&P 500. and obviously there's a war going on, so that affects as well. But if we're gonna look into the future, then expect the fall to perhaps continue a little bit more, but a slowdown, and finally a reversal, because on this picture we're going down there. On this impulsive move, then we are actually getting done. So together, I would say look for a slowdown, perhaps some sideways action before we continue. Is this a foolproof method? Well, no, of course not. I mean, this is a method, not a system. For it to become a system, we also need to add entry, exit, and risk management. And to be honest, that's an entirely different topic, and we will have to save it for another video. So anyway, there you go. An easy, clean, and fast way to use the Ichimoku Cloud. And if you believe that I cherry-picked the chart, which I didn't, I just opened up a chart and rewind basically in the time frame to work with some random time frame. Leave me, but anyway, if you want me to look at some other stock or commodity or whatever, if you believe that I cherry picked this, just leave me a comment down below, and I will redo this exactly the same exercise with basically any chart and time frame you would like. Well, within reason, of course. I can do a few of them before it gets too much work, tedious. Anyway, guys, thank you for watching. Cheers.